So how will the president's proposed tax increases impact the stock market? Somewhat what we just asked Ed Mills, at least about the future. Our next guest says he is more concerned about what gets traction in his past rather than what's proposed. So let's bring in Jeremy Bryan, portfolio manager at Gradient Investments. Thank you for being with us here, Jeremy. Obviously, we have the State of the Union tonight. The election is still some ways off. Many people will be paying attention to what Biden has to say, potentially the unofficial launch of his new campaign. But will markets actually react if it is just a proposal at this point, as we suggest?
Short answer is no. I really honestly don't think so. I think everybody is in relative agreement that nothing's going to happen until November, right? We're kind of in a period of stasis where they're going to go out and run. That's what they're going to go out and do right now. And they're going to have a lot of proposals as a result of running. And as we get closer and as we get, nearer and nearer to the election time, I think even a month beforehand in 2016, there was a probability that it was Hillary's to lose right at that point. So you never know beforehand. We never take a shot. We never try to forecast all of that stuff beforehand. We'll monitor, we'll pay attention. But really, especially around portfolio actions, we are not going to do anything in advance of these potential type of things that really don't have a lot of traction to pass up until after the agendas are set after the election.
Our previous guest, Ed Mills, suggested that some of the programs that Biden had put into place are kind of just now really starting to pay off. And he called it a hidden fiscal stimulus, things like the CHIPS Act and the infrastructure bill. When you look at where we are currently and with the state of inflation and the state of the economy, do you believe that recession is off the table? Do you believe that some of these policies have helped that, or is it all about the Fed?
It's funny. I don't think they're that hidden. We've been talking about the Inflation Reduction Act, reshoring, the CHIPS Act is all within that. And if you look at the performance of the industrials who would benefit from kind of infrastructure, these kinds of things, it's about the best performing sector out there. I think over 48% of industrials companies in the S&P 500 are at all-time highs. So it's not really all that hidden. The companies have benefited from that. And frankly, their valuations have certainly benefited from it. So to answer your second question, whether a recession, I don't see where is the recession at? I really don't see it in the near term. There's nothing that would suggest us rolling over, especially right now, that would suggest that we're in recessionary conditions. Now, are we going to continue to accelerate and accelerate and accelerate? Probably not. We're probably more of a stable to maybe even decelerating economy. But I just don't see the avenue, especially in the near term, for recessionary conditions in any way, shape, or form.